The JSE is facing mixed trade as Asian stocks ease from a 3-month high, while U.S. service data has fueled bets for a higher Federal Reserve terminal rate. Meanwhile, oil is continuing its rebound as the implementation of sanctions on Russian crude oil has calmed fears of oversupply, while the relaxing of China's COVID-19 regulations has also bolstered demand outlook. Carmen Mpelwana is with Sanlam Investments, joining us now for the latest look at these market developments. Carmen, welcome to Daytime Update. Just on the point that I was just making now, let's get the latest then on how things are looking in the global market space, especially with Asian stocks in mind, slipping. U.S. economic data are saying bolstering Fed rate bets.
Yeah, it seems to be that the initial elation around the Chinese easing of restrictions has been overshadowed by the numbers out of Fed, both yesterday in terms of the service activity numbers, as you've mentioned, as well as the aftermath from the jobs numbers on Friday, which both surprised to the upside. We had been hoping to see weaker numbers on both of those, sort of giving an idea or read-through in terms of the impact of the rising interest rates. So what this does mean is that we now would expect that the Fed would look to continue to increase interest rates for longer than actually been expected before. I think before this we would have hoped that they would have just remained at the current level, albeit for a bit longer.
And here at home, how's the JSE doing, given the positive start to early trade, as well as what appears now to be, at least in this early stage, an ever-firming rand?
Yeah, so we're definitely seeing a bit of a mixed bag this morning, but it seems to have been boosted by the GDP numbers that have come out. Bank stocks or the bank sector definitely seeing a bit of a boost. Retail as well, seeing a bit of a turnaround after its pullback on Friday, or last week Thursday at least. And then we've seen the resources sector also just coming off on the back of weaker commodity numbers. So again, a bit of a mixed bag. JSE down marginally at about 24 bips.
Let's talk about the latest GDP numbers out from Stats SA today, better than expected. But what's been the overall reaction from what you've been able to hear?
Yeah, so definitely a overshoot in terms of expectations. Consensus for year on year was looking at about 2.8% for the third quarter. Keeping in mind that last year we did have the unrest in this third quarter, so that was going to be a bit of a lower base. However, we're coming at an increase of 4.1%. As I mentioned earlier, definitely giving a bit of a tailwind to the bank sector. This was largely boosted by the agricultural sector in terms of this increased 4.1%, as well as transport. So I definitely think that the market seems to be receiving it pretty positively. We would have also expected, similarly to the US, that we were seeing a pullback in the economy, but that does not seem to be coming through at the moment.
Something else I wanted to ask you about was this order for Glencore to pay about 3 billion rand. That's to do with a corruption claim in the DRC. What exactly did the company do there?
So this is one of a few claims we've seen year to date from Glencore. I think in total the cumulative number thus far for the year across the globe for Glencore to pay back is about $1.6 billion. So just to put it into perspective, what this relates to is the time period between 2007 and 2018 and the alleged corruption with certain officials in the DRC. Glencore has now come to an agreement with the government there to say that they will pay this amount for all present and future alleged claims of corruption. Unfortunately, as I've mentioned, the number is quite a big one in total, but they have said that they will be looking to change their policy as well internally to avoid this going forward.
Let's end with Marion Roberts. Not great news for them. In Australia, the construction company has now put its construction and engineering unit there in business rescue. What's brought them to this point?
So a few weeks ago, we did get the announcement they were looking to offload this asset or this division to an Italian industrial group called Rebuild. And the hope there was that they'd be able to pull some cash out and alleviate their balance sheet. So this problem has come about by the mismatch, I think, of cash flows. So specifically in terms of the Australian operations, they are struggling for working capital, and there is a loan as well that was under pressure and a timeline. So unfortunately, this seems to have fallen through. They couldn't come to agreement on terms for the deals that gone into business rescue, which seems to be covered by Deloitte at the moment, who will be advising them. And the hope there is that they'd be able to somehow alleviate the balance sheet in order to save this business.
Carmen Mpelwana, a pleasure to speak to you. Thank you.